Thank you so much, Cindy. And thank you all for joining us tonight. We got a host of information, great information to share with you tonight regarding our down payment assistance program and our low interest rate mortgages. We have an attorney who is going to be on to speak about the importance of hiring an attorney during the home buying process. We have one of the stellar realtors in the state of New Jersey here tonight also to help you navigate this process. And we have my good friend and colleague, Mr. Henry Gordon from PRAB, to share some additional information and resources to help you with your home buying resources. So with that, I'm going to get started and share my screen. And let me maximize my screen. And again, my name is Jesse Crawford from New Jersey Housing Mortgage Finance Agency. And today we're going to talk to you about maximizing first-time homebuyer opportunities with down payment assistance. A little bit about us. NJHMFA, or New Jersey Housing Mortgage Finance Agency. At our agency, we provide funding for affordable home ownership and housing opportunities for New Jersey residents. We are a state housing finance agency, and we respond to the needs of our residents here by implementing creative programs and establishing alliances that fund low interest rate home mortgages for first-time home buyers. And we do this through a network of approved lenders. We're based out of Trenton, New Jersey. Just a little bit of some statistics I want to go through. First-time home buyers make up 33% of all home buyers. And the largest share of home buyers continues to be between the age group of 25 to 34, which accounts for 54% of all home buyers. 71% of all first-time home buyers were previously renting an apartment or a house. Now, I want to talk a little bit about some of the roadblocks to home ownership, or some of the stumbling blocks, the things that hinder folks from being able to purchase a home, or some of the things that they think will hinder them from being able to purchase a home. Things such as down payment and closing costs. Qualifying for the mortgage is another issue. The amount of debt that they might currently have. Job security, whether or not you're even ready to settle down in one place for a period of time. And something that we're seeing all across the nation is not enough inventory, not enough homes for sale. So these are just some of the roadblocks to home ownership. And as you can see on this particular graph, affording the down payment, 68% said that this was a leading barrier for them. Qualifying for the mortgage, 53%. The amount of debt they might be currently carrying, 50%. And job security comes in at around 39%. Nearly 9 in 10 low-income renters, 88%, said that having money for down payment and closing costs was a major obstacle to home ownership for them. Okay, middle-income renters, 72% also indicated this same challenge. And of these groups, 62% of low-income and 39% of middle-income renters considered having funds a major obstacle to home ownership. Additionally, 53% of renters cited their inability to afford a down payment as the reason why they rent, the most frequently cited explanation. Here's a snapshot of expenses that prevent buyers from being able to purchase a home. Student loan debt, 56% of first-time home buyers, major obstacle for them. 34% credit card debt, 36% car loans, childcare expenses, healthcare costs, and others. Now, really quick, I want to talk about our mortgage programs. We have two foundational mortgage programs at our agency. The first one is called the First-Time Homebuyer Mortgage, and the second one is called our Homeward Bound Mortgage. They're both 30-year fixed rate government insured loans, and we provide a competitive interest rate for each one of these loans that the interest rate, we actually dictate what the interest rate is actually going to be. It's not dictated by our lender, it's not dictated by your credit score or any other adjustments to the loan. We dictate these rates based on market conditions each and every day, and we send out these rates to our lenders each business day by 10 a.m. Now, the first-time homebuyer mortgage, here are the borrower requirements for our first-time homebuyer mortgage. You must purchase and occupy a resident here in the state of New Jersey as your primary residence. You must qualify and meet all requirements for our agency's first mortgage, which is originated through one of our participating lenders, and I'll talk about that a little bit later. The borrower must be a first-time homebuyer. Now, a first-time homebuyer is defined as someone who has not had ownership interest in their primary residence during the previous 3 years. Qualified veterans do not need to be first-time homebuyers, but must not own another property prior to closing. Additional requirements: the minimum credit score is 620 or higher, okay? And the debt to income ratios for these particular programs for the first time home buyer is 40% on the front and 47% on the back. Now, borrowers are also required to have 2 months monthly reserves of mortgage payment, and I'll talk about that in detail later on in the presentation. Borrower's household income must meet statewide household income limits, and I'm going to click on the link and show you income limits here. Now, here are the income limits for the statewide income limits for the first-time home buyer program. And Middlesex is here at the bottom of the first box. So 1 to 2 adults working in the household. The maximum income from Middlesex County, Hunterdon, and Somerset is $119,500. 3 or more adults working in the household, the maximum income is $137,425. And lastly, on this particular slide, borrower may not possess enough liquid assets to close the mortgage loan at 80% loan to value or less. Now, the Homeward Bound program, very much similar to the first-time home buyer, but there are some distinct differences, and I'll point those out to you. Again, borrower must purchase and occupy a home as their residential property here in New Jersey. You can be moving from New York to New Jersey, from Connecticut, from PA, anywhere else in the country, but you must occupy this residence as your primary residence here in the state of New Jersey. Again, borrower must meet all requirements for the mortgage through one of our participating lenders, and the borrower must be a first-time home buyer as defined as someone who has not had ownership interest in their primary residence during the previous 3 years. So theoretically, you could be renting a home for the last 3, 4, 5 years, but you have an investment property in Florida or some other state, or here, even here in New Jersey. As long as you can prove that you have been renting your current primary residence, living in that residence for the last 3 years, you are considered a first-time home buyer. And as with the other program, qualified veterans do not need to be first-time home buyers, but must not own another property at closing. So they have to sell their prior residence at or before closing. And for the Homeward Bound mortgage, there are higher income ratios compared to the first-time home buyer. And let me show you what it is here. So FICO score is 620, just like the first-time home buyer mortgage. But as you can see at the top of this slide, the debt to income ratio is 40 on the front and 50% on the back. And this is a benefit for someone who does not qualify for the first-time home buyer, they may qualify for the first time for the Homeward Bound program. So if you have more debt or monthly debt on your credit report that you have to pay each and every month, and your ratios are above the requirements for one program, you may possibly qualify for the other program. And each program has different interest rate. And the first-time home buyer, currently the interest rate is 2.75%, and the Homeward Bound is 3.25%. And the reason that the Homeward Bound is slightly higher is because the debt-to-income ratios are higher. Income limits are actually higher also. So it takes into account for that. But let me show you the income limits for the Homeward Bound program. As you can see here, the Homeward Bound income limits are for Middlesex County, $167,300, much higher than the state income limit. So if you don't qualify for the first-time home buyer because your income is over or your debt to income ratios are too high, then you can possibly qualify for the Homeward Bound program. Where am I? New share. Let me close this here. What is happening to my screen here? Can everybody see my screen? Okay.
Yes.
And as before, borrower may not possess enough liquid assets to close the mortgage loan at 80% loan to value or less. Now, really quick, I want to talk to you about something that most folks may not even know about. It's called urban targeted areas. And there's a benefit to purchasing a home in an urban targeted area. Urban targeted areas are designated by the U.S. Department of Housing and Urban Development. And each county has designated urban targeted areas. Now, the benefit for purchasing a home in urban targeted areas is that homes located within these areas or qualified veterans, again, do not need to be first-time home buyers. So I'm going to say that again. If you are an existing home buyer or an existing person who currently owns the primary residence that you're living in, and you want to take advantage of our low interest rate mortgage and down payment program, you can do so by purchasing a home in an urban targeted area. And this is a great benefit for someone who is actually looking to trade up or trade down. You could be, someone who has an empty nest now and you don't need all the rooms in the house. You want to scale down a bit. This is an opportunity for you to purchase a new home, utilize the down payment assistance program. And the only caveat here is that you're going to have to sell the current residence you have prior to closing on your new home. So this is an opportunity for those who aren't first-time home buyers but want to take advantage of it. And also there are higher income limits permitted for qualifying for the loan and higher purchase price limits. Now, let me show you another screen here and hopefully it will work. There we go. This is our site evaluator, okay? This tool is used to determine whether or not a potential property you're looking to purchase is actually in an urban targeted area. You simply would type in the address in the search box, and it will return to you values on the left, letting you know whether or not that particular property is actually in an urban targeted area. And if so, you can take advantage of the benefits for purchasing in an urban targeted area. Now, all the links that I'm clicking on in my presentation will be emailed to you at a later date, I think tomorrow, and I think they're also will be included in the chat function as we go along. And additionally, purchasing in urban targeted areas, also, you have the possibility of combining other down payment assistance programs. I'm going to click on the income limits really quick so you can get a look at these here. And as you can see again, for the Huntington and Middlesex and Somerset counties, 2 in the household, adults working, $143,400,000, okay? And 3 or more, the maximum income is $167,300. Now, down at the bottom of this particular slide are some additional resources that would be beneficial to folks looking for additional down payment funds. You can couple with our down payment program, which I'll talk about in a minute in detail. I'm purposely waiting to talk about that at the end of my presentation, because that's the meat and potatoes of the actual presentation. Downpaymentresources.com is not a site that our agency owns or even manages, but it's a great tool for folks who are looking for additional down payment resources. I had a woman who called me today who was on one of our webinars last week. She got pre-approved through one of our lenders for $200,000 to buy a home. Our down payment assistance is going to give her the 3.5% that she needs of that $200,000, but she's short. Her closing cost $8,000, and between what we offer for our down payment program, she's off by $5,000. So I gave her this resource to check to find additional resources to help her cover that cost. Great resource for folks looking for additional monies. And lastly, on this particular slide, freeannualcreditreport.com. If you need a copy of your credit report from all 3 credit bureaus, you can get a copy once a year free of charge just by going to annualcreditreport.com. Now, really quick, this is a side-by-side comparison of both programs. Both minimum credit score of 620 or higher. First-time home buyer has lower income limits. Homeward bound has higher income limits. First-time home buyer, lower debt-to-income ratios, higher debt-to-income ratios for homeward bound. They're both 30-year fixed-rate mortgages, so the interest rate is not going to change for the life of the loan. First-time home buyer has a lower interest rate, which is 2.75% currently, and homeward bound has a 3.25% interest rate. Now, what's required for all folks through our programs, you must receive and complete HUD-approved credit counseling through a HUD-approved agency. And you can find an agency at HUD.gov or CRAB for Middlesex County. They offer it, but it is required upon completion of the credit counseling course. You will receive a certificate. That certificate is good for 1 year. A copy of that certificate has to be submitted with your closing package. It's a major requirement that you receive credit counseling for any of the programs that you get approved with through our agency. And lastly, on this particular slide, the great thing about these programs, if you are someone who's looking to purchase more than a single family unit, you can purchase up to 4 units and occupy one of those units as your primary residence and rent the other units out for rental income. But you have to occupy one of those units as your primary residence for 5 years to take advantage of that particular scenario. Really quick, these are the documents that you're going to need for our mortgage. You're going to need 3 years signed federal tax returns or 3 years transcripts, 30-day pay stubs, and 2 years W-2s for all household members. You're going to need 2 months bank statements for all borrowers, and borrowers must have available 2 months of reserves of the anticipated monthly mortgage payment. The reserves can be in a personal account. It can be a gift to qualify from a loved one or a friend, or you can provide statements such as your 401k or pension to show that you have those funds if needed in an emergency. They do not have to be withdrawn. You just have to provide the statements to show that you have these funds available. And agency loan proceeds cannot and will not be used to pay down any of your debt to qualify for the mortgage. And in some cases, borrowers can get money back at closing, up to $3,000 of paid out-of-pocket expenses such as your earnest money deposit, the appraisal fee, home inspection, pest inspection, and even your home buyer's course. Additional certifications, if there's a well or septic certification is needed for that. Wood destroying pest inspection certification is needed. HUD-approved credit counseling, as I said earlier, is a must and has to be submitted with each file for each borrower. And if the seller of the property is a business formation docs are required. If the seller is part of an estate, then short certificate and death certificate are required, and power of attorney approval is required for the buyer or the seller before the loan can go to closing. Now, our agency does not underwrite these loans at all. As I stated earlier, we have an approved list of lenders who collect all your documents, pre-qualify you as a potential borrower, and underwrite your entire loan. Our agency reviews the loan prior to closing for compliance. And lenders will submit to us typically the loan for review 10 business days before closing, okay? Now the review could take up to 5 business days, but we don't typically use the full 5 days. And in some cases, get same day approvals within hours. It depends on how that file is submitted to us, and if all the requirements and loan conditions are met, we will clear that file ASAP and get you to closing. We will never delay your file at our agency for anything other than the fact that the file was not submitted to us in its entirety with everything and all the loan conditions met from the lender. So I wanted to make that point that the file will never be delayed from closing because of us. It's because of something or loan condition that has not been met. Now, this is the happy part of my presentation, our down payment assistance program. I call this the free money section of our presentation. Our agency provides to qualified home buyers $10,000 towards down payment and closing costs. Now, our down payment assistance program is a $10,000 forgivable loan with no payments and no interest rate. I'm going to say that again. $10,000 forgivable loan, no payments, and no interest rate. And this $10,000 is a sub-program to be coupled with our first mortgage, okay? Either the homeward bound or the first-time home buyer mortgage. All our mortgages are government insured currently, FHA, VA, or USDA. We will be providing, I'm happy to say, conventional lending in the very near future, hopefully within the next 2 months. So that's another resource for first-time home buyers. And it's a great opportunity to get even more folks into their first home. Now, the major requirement for our program is once you close on the home, you as the home buyer must reside in this property as your primary residence for 5 years. 5 years without selling it, without refinancing, and obviously without defaulting on the mortgage. As long as you adhere to those guidelines, the $10,000 DPA is totally forgiven. And understand that the $10,000 is a forgivable loan. It's not a grant. it's a forgivable loan with no payments and no interest rate. So over the 5-year period, then there are no payments. Okay. So as long as you stay put, pay your mortgage, live in your home, enjoy your home, that $10,000 is totally and completely forgiven. In my book, in my definition of free money, that's free money. Now, in the event that you close on the home and 4 years down the road or 4.5 years down the road, you decide you want to refinance or you want to cease to occupy the premises before the 5-year term is up, you're going to be required to pay the entire $10,000 back. The other great thing about our program, and this is not something that we always had, we just got this over the past year, you can also utilize our down payment and mortgage program to purchase new construction. And it must be your primary residence here in the state of New Jersey. So that's really a great benefit that we didn't always have. Prior to this new change is that the home had to be an existing home, either on the market for at least a year or something along those lines, but it couldn't be new construction at all. And borrowers can also use seller concessions with down payment assistance. And Shaquita, the realtor who's on with us tonight, will talk about that. And it's, in some cases, borrowers may not need any additional funds of their own at closing. So you could conceivably purchase a home with little or no money out of your own pocket. Really quick, the eligible properties. Again, I've been saying this all through the presentation. Property must be located in New Jersey as your primary residence. It must be a single family home or condo, townhome, could be a manufactured home or a mobile home, which is on a fixed foundation. It cannot be just something that you can wheel from town to town, but it has to be on a fixed foundation. And you can purchase up to a 4-family dwelling as long as you occupy one of the units as your primary residence for 5 years. How to prove counseling. Here's the link. It'll be included in your chat and the email that you receive tomorrow. HUD.gov, you can go to this site, type in your search criteria for the area that you're in, and it will return how to prove counseling agencies, tell you exactly what they provide, and you can set up your credit counseling with one of these agencies. Now, some agencies charge a small fee. Some agencies, it's free. So you can do your research and find out which ones charge and which ones do not, and determine which one you would like to use. And just to wrap up, one of the main solutions or leading reasons that consumers find it difficult to purchase homes, we provided an answer to that solution and a strategy to help renters and buyers who face those roadblocks that I talked about earlier. We're able to help you with your down payment and your closing costs, and you can receive additional funds either way through seller concession from the seller of the home or through other programs located throughout the state at the municipal level or township. There are additional funds. Typically, there are municipalities that provide down payment initiatives or incentives, I should say, to get you to purchase in their county or municipality or township. And as long as that entity will allow it, you can couple our $10,000 DPA with theirs. The great thing about this particular slide is at the bottom here. This link will take you to our Road Home New Jersey home buying guide. We have these guides in the hard format and digital format. This is a great resource for first-time home buyers. We give these out to housing counseling agencies all across the state. We give them out to realtors who give them to their clients also. It's a great resource and tool for anyone getting into this home buying market. And it takes you through the steps of purchasing your home from the beginning, calculating, the cost of home ownership, all the way through what happens at closing. And there are helpful links for mortgage calculators, how to, you know, calculate what your initial mortgage is going to be, down payment amounts, whether or not you need home buying counseling, how to get pre-qualified. Just a great tool to help you through this process. And at the end of this particular guide is a glossary of terms that can help you out with any terms that you might hear or come across, and you need some additional explanation of what that term is or what part of the process it pertains to. Great resource, and this link will be included in the chat and in the email that's going to be sent out tomorrow. Now, if there's someone on the call, I'm sorry, not on the call, but on this webinar who's currently pre-qualified and your lender is not one of our approved lenders, but you want to take advantage of our down payment assistance, you can simply have your lender contact us at sflenders@njhmfa.gov. We can let them know how they can get on our approved list. It takes about a week. We can get them up and running, and you can take advantage of our DPA and use the lender that you're currently using to purchase your home. Now, for folks who may not be pre-qualified and are on the webinar, and after this webinar, you're excited and you want to get started, you're ready, this link here takes you to our lender request form. And you actually can put in your information to be paired with one of our participating lenders. Your email, first name, all that good stuff, whether or not, what county you want to purchase in, whether or not you need down payment assistance, what type of meeting you want, and we will return to you one of our approved lenders who will then work with you to get you pre-qualified and get the ball rolling. If you do not want to put in a request, you can also utilize the link at the bottom of this particular page to download our printable list of participating lenders with the name of the lender and their telephone number, and you can reach out to them directly. That wraps up my portion of this particular webinar. My contact information is listed here. Feel free to email me with any questions that you might have about the program or anything, doesn't matter, or give me a call at the number on the screen. Email is the best way to reach me, but if you have to call me, leave me a voicemail and I promise I will get back to you. It may not be as quick as email, but I promise to get back with you. And we're going to open it up for any questions.
Thanks, Jesse. I did have Charlene is on the webinar. She had mentioned she reached out to get a list of our top lenders, and she did leave a message for someone last week, but she hasn't heard back from them yet. Is there like a standard amount of time, a week or so, for them to get back to her? I advised it can't hurt to just reach out to the next one on the list.
Yeah, two things here. One, what we've been finding is that the email back to a lot of the folks that have put in the request is going to the spam folder. And when we can check to send when it was sent out. And when we come back and say it was sent out on such and such date, check your spam folder, 99.9% of the time they come back and say, oh, yes, it was there. So one, check your spam folder. Two, also, if you receive information for a particular lender and their telephone number is on it, you can give them a call also. But in any case, with anything, you can always email me and I will follow up and find out what the situation was, and we will get someone on it right away. So just feel free to email me and I will get on it right away.
Thanks, Jesse. Yeah, it sounds like she had left a message for the lender themselves. And that's who she's waiting to get back to her. But yeah, Charlene, I would say, yeah, contact Jesse if you have questions, but I would go ahead and just start with the next one on the list. All right, Jesse, we have a couple questions, if that's okay, before we move on to our next speaker. Charlene says, with an FHA loan, additional mortgage insurance is required, and how much is that?
That's a great question. And typically, well, for FHA, insurance, mortgage insurance is required for the life of the loan. So that's required for the life of the loan. It's not something we can get around. It just is what it is. The great thing also is that we will be providing conventional lending within the next few months or so. But anytime you put down less than 20%, in most cases, mortgage insurance is going to be required. So it's just one of those things that you can't get around.
Thanks, Jesse. Audrey, if you would like, feel free to unmute. Audrey's asking if she should include her daughter's income if she's going to apply for the mortgage by herself. So Audrey, I assume obviously your daughter lives with you.
Yes.
Okay.
Audrey, is your daughter a student?
No, she's not.
Okay, and is she over 18?
Yes, but she's unemployed, actually.
Well,
Due to the,
you said she's unemployed?
yes.
So if she's unemployed, then unemployment is not permanent income, so that wouldn't be counted.
Okay.
All right.
All right.
Thank you. All good questions. That's all I have in the chat for questions. Does anyone else have questions for Jesse? Before we move on to more speakers, feel free to unmute. There's one in the chat right now. Any tips for first-time home buyers in this hot market? I keep hearing that buyers do not want to work with FHA loans.
Well, that could be the case. It's sad, but true. And Shaquita will talk about this in detail. But what I want to say is that our turnaround time for an FHA loan and our, well, let me back up. FHA has always had a stigma. Even when I was a loan originator, folks didn't want to do FHA because they say it would take too long and too many requirements. The fact of the matter is, with FHA, there's a 3.5% down payment requirement. So if you're purchasing a $200,000 home, just as a simple example, $7,000 has to come out of your own pocket, okay? We're giving you $10,000, so you already have your down payment, and you have funds left over to help with your closing costs. And if you receive any additional funds with seller concessions or any other grants, you can couple those to help with your additional costs. But it's unfortunate that some sellers don't want to deal with folks with these programs, but it's important to have a realtor that can communicate to these sellers that these programs are great programs and are not going to hinder the sale or the closing of the file in any way. So that stigma has to be challenged and changed, and it has to start with your realtor explaining these programs. And Shaquita, I don't want to step on your toes, but I'll let you explain that in detail later, okay?
Great, thanks, Jesse. Any other questions for Jesse so we can move on to our next speaker? Feel free to unmute. Again, use the chat function. We can always get to it later if someone else is speaking, if you think of something. Okay, with that, I will thank you, Jesse. I will move on to our next speaker. So I'm going to put in the chat now, we have Henry Gorman, and he is our Senior Director of Family and Housing Services with the Puerto Rican Action Board. And he's going to discuss the American Dream Down Payment Initiative for Middlesex County. And if you have questions, I put the contact in there for Deanna Roberts, and she's a housing counselor over at PRAB. Thanks, Henry, for joining us today.
Yeah, thanks for having me on. As Cynthia mentioned, I am the Senior Director of Housing and Family Services. I used to do this all the time with Jesse and Chiquita and Satal, who I think is on now. But it's been a long, long time since I did this. And so I'm gonna do my best to answer your questions. But if I can't, Deanna Roberts, who works in our housing department, is Cracker Jack, and she'll be able to fill in tomorrow anything that I couldn't get or that I say wrong tonight. So, but anyway, I'll go right in. Just real briefly, who we are. PRAB stands for the Puerto Rican Action Board. We have been around since 1969. We incorporated in 1971. We started out, the only thing they were doing back then was English as a second language for recently arrived Latinos. And now we're a comprehensive human services agency. We have more programs today than I think we've ever had before. Some of the other ones that I'm involved with, I'm just going to do a real quick plug for. If you're in Middlesex County, which is really our territory for most of our programs. Some of them expand out into Somerset and some of the surrounding counties. But we have our LIHEAP program, which is our low income home energy assistance program, where you can get a subsidy if you're income qualified for your heating bills. We have a sub program in that can help you with getting oil heat. If you have oil heat, we can get you oil during the winter if you run out. Part of that is also an emergency assistance program for people that are going to have their power shut off if you qualify again. Another department that I work with is the weatherization department. If you're income qualified and your home also qualifies in terms of it's leaky enough, we can save you a lot of money on your heating bills by putting in new windows, putting insulation in the walls, insulation in the attic, those kind of things. So we have a program that does that. And we have our Housing Coalition of Central Jersey, where I started out, where we can help for those, if you have relatives who are already homeowners and they're having trouble making their payments, we can help them get mortgage modifications, avoid foreclosure. We have tenant landlord counselors, and we have a first-time home buyer program. So I'm going to speak briefly on one program that we have, which we call ADDI. That stands for the American Dream Down Payment Initiative. That is the name for the program just in Middlesex County, and is for Middlesex County residents. It is federal money. I believe it comes from the federal home program. So if you're in another county and you're watching this, you may be able to benefit from it, from the federal program, but it probably won't be called ADDI. So with that program, it's a down payment assistance program. We can get you $5,000 towards your down payment if you meet the qualifications. So in this case, you must be purchasing a home in Middlesex County. You must have been a resident of Middlesex County for at least 1 year. So you would have been renting. It is for first-time home buyers. So you would have been renting or living with a relative. You could have been, living with your parents, and now you're moving out or something like that, or other relatives, doesn't matter. The program limit that I have on the paperwork right now is that the purchase price of the home is $299,000, but I'm pretty sure that that's been raised recently and is in the low 300,000s. So that would be the maximum purchase price that the home could cost you that you wanted to use the $5,000 for. Okay, you can combine it with the other programs like that Jesse talked about, as long as the county approves it. They administer the program. We will do the counseling with you. We will help you get the application together. We'll submit it for you. We'll follow up with the county and get you an answer to get you the money and work with you all the way through and give you what Jesse was talking about earlier, the certificate, the individual certificate. Other requirements for the program are, besides that purchase price, which is a hard limit, you also can't be purchasing a home that is more than 4 times the gross income of the household. So if the household makes $50,000, your limit is is $200,000 for a home. For this program, obviously, your mortgage will, probably approve you for more than that. But for this program to get the $5,000, that's what you would have to be within. You would also have to have more than 1% for the down payment, which isn't very hard. But you also can't have, at least at the time of the closing, you can't have more than 10% for the down payment. The program basically is trying to target assistance to people who need it, who need that money. So if you have too much money in the bank, they don't approve you for it either. So it's kind of the sweet spot is kind of between that 1% and 10%. You're in that, that 9% range that you want to be. And, there are ways, especially if you get in with us early enough and we're working with you, by the time you get to the closing, maybe some of the money's been spent for different things. And so, you're within that boundary. The same things that Jesse just kind of went over with you, they're going to need all your bank statements, can't be any missing pages. It goes back, I think for ADDI in Middlesex County, we go back about, I think they go 6 months on the bank accounts. So they're going to look at those. They're going to look at your tax returns last 2 years, I believe, 2 or 3 years. And they're going to want to, we're going to have all the pages for that. It can't be just, the first page, that kind of thing. Sometimes we get incomplete documentation. Income, same thing. They're going to be, looking for about the last 6 pay stubs. So if you get paid every week, which most people don't anymore, it'd be 6 weeks. But if you're getting paid bi-weekly, then it's going to be the last 6 of those. So a little bit longer period of time. And we're going to figure out your income. All the income in the household counts towards income for the ADDI program. All right. And there are actually different limits depending on the different number of people who are living in the household. So I believe for one family, if you were by yourself, you were one person, you could make up to $53,100 and still qualify for ADDI, but not more than that. 2 people is $60,700, and it goes all the way up to 8 people. If there's 8 people in the household, the maximum would be $100,150. So as long as you're at that or below it, you would qualify for ADDI. And so that's, I don't know how many people here are from Middlesex County, but I would strongly, urge you to contact us. We never closed during COVID. We did go virtual with a lot of our programs. And so we do a lot now by phone and by email and scanning documents back and forth and that kind of thing. We spent a lot of money on technology. So we can definitely work with you to get everything together, put together a great package. These packages are usually very, very thick by the time we're done doing them and send them off to the county. And then, like I say, our staff will definitely follow up with them and get you back an answer, yay or nay, to get the money. Obviously, the money doesn't go directly to you. It goes to the closing. And it can sometimes make a big difference. What else do I want to tell you about it? So our number is, the main number is 732-828-4510. And I think we're probably providing, I saw in the chat, Dion's email address is right there, as well as her extension as well. So her department can help you with anything to do with housing, but also those other programs that I mentioned, and many others that we have. If you're in Middlesex County, give us a call and we'll see if we can help you. And I should also mention we have been open for a little while now, by appointment only. We have a lot of PPE in our lobby area, and so you can come down and meet with us. We're getting back to that, and very soon, I think actually next week, we are actually going to be opening up our lobby for people to drop in. So you won't need an appointment anymore. We're trying to work our way back to eventually being, fully open, obviously, probably by sometime in the summer. So, but we are still working away at all of these programs, and we're here to help. That's the whole purpose of the agency for almost 50 years. So just let us know what we can do. With that, I think that's about all I have, unless people have questions.
Thank you, Henry. And wow, 50 years. I didn't realize that. That's great.
Yeah.
Awesome. Anyone have, here's one question. What is the length of time you must be working considering COVID? Oh, I think that's a home buying question specifically. Henry or Jesse, I guess either one of you. Maybe more Jesse.
Well, you're going to still need consistent work history. So there's different scenarios, and the lender actually can work with you, determine if you meet that criteria. If not, they'll let you know exactly what you need to do or how long you need to be on the job before you can apply. But it depends on the situation and the scenario. So if you move from one job and to another job within a relative short period of time, and you're doing the same thing that you were doing prior, there might be some way to work that out. But if there's a large gap, it might not be doable. But the lender can actually let you know what those requirements are.
Thanks, Jesse. There's a couple other questions in the chat. I think they're more for Jesse, which we will get to in just a moment. I just want to ask if there's any questions for Henry on the American Dream Down Payment Initiative for Middlesex County or any of the other programs that he had discussed from PRAB. Feel free to unmute or put in the chat if you have questions. If not, I did put, like Henry said, Deanna Roberts' information in there, her email and phone number. So you can always reach out about that if you're in Middlesex County or if you have questions about other programs they have. Very good programs they have, and please use their services. They're great. But thank you, Henry, again, for coming on.
Thanks, Henry. It's always good to see you, my friend.
Thanks. It was great. I'm going to go back to doing this all the time now. I like this.
Right?
Awesome.
Get you back into it.
Andy. Awesome.
Henry, feel free to stay on. If you have to go, feel free, and we can always reach out to you if someone has a question that comes to us. I can always forward it on to Deanna. But I'm going to get to some other questions that we have here, if that's okay, before we move on to Chiquita.
Any realtor questions, leave it for Chiquita.
I will.
All right.
This might be a Chiquita too. Well, no, this one might be for us. So Jesse, I'm looking to purchase a duplex with my daughter. Would this be considered two separate mortgages? This is from
No, it would not be considered one mortgage. And again, you would have to occupy one of those units as your primary residence. And is it a scenario where you want to buy a two-family and the daughter lives in one and you live in the other? You can unmute yourself and clarify.
Diana, feel free to unmute if you want to discuss with Jesse.
Yes, that would be, yes, is the question,
Okay.
the answer.
Right. So the typical scenario would be you would actually purchase the home and either rent it out to a private individual or to your daughter. It wouldn't be two mortgages. It'd be one mortgage. You would be the buyer of the property. And then in order to, if you could sustain the mortgage just on your income and your daughter lived there, whatever the cost it is, that's entirely up to you. But to answer your question, it'd be one mortgage.
Great. Thank you, Jesse. Another question to you. If all your paperwork, financials, etc., are all in order, can you apply and hopefully secure any of the funding discussed in tonight's So any of our programs, I guess is what you're asking, right, Andrea? To finding a home to purchase.
Well, there's a process to get pre-qualified and then actually get approved. So the pre-qualification is basically a snapshot of the basic information needed to get you a mortgage. And then the actual extensive approval is going to require all your documents and review your credit and a bunch of other things so you can get a firm commitment. So all this takes time. But during that time, when you get your pre-approval, you actually can then reach out to a realtor and start the process of finding a home. And then as everything is working together, all parties involved, there's a culmination, everything comes together at the end of the day or down the road for your closing. So it's a concert of things going on. So it's not like you're going to get qualified and you're going to get a check in hand tomorrow and you're just going to go to someplace and basically show I got a check for X amount of dollars. It's a process, and all parties involved have to do their job to make this thing run smooth.
Great, thank you. All right, if anyone has any other questions, feel free to keep putting them in that chat and we'll get through them. But right now I'd like to move on to another speaker. We have 2 speakers left. So I'm going to move on to Chiquita Pittman. She's our realtor associate from eXp Realty. And I'm going to put her contact information in the chat now. Thanks for coming on.
Thank you. Thank you. I want to say hello to everyone and thank you so much for having me on. I would also like to say that I've been selling real estate for 30 years and this program and all this information and Jesse being the face of this program is really, really fantastic. And I'm going to encourage everyone to please, if they can, to take advantage of these programs that they have. I'm actually going to talk to you about the whole real estate process. I'm going to share my screen with you in 1 second. Are you able to see this?
Yes.
Yes.
Yeah.
Awesome. So I'm just going to walk through with the whole real estate transaction process. Like Jesse said today, it's so important to work with a real estate agent that is educated on these programs and that is going to advocate for you. The market today is extremely hot right now. And you have to really have a team of people who are working for you and looking out for your best interests. And with the market being so competitive, it's extremely important to also have a good real estate attorney. And I have to say, I've been working with Satal for probably like over 10 years now. And when I need him to be a pit bull to protect, our client, he is great at doing that. Because buyers today, right now, unfortunately, are skipping home inspections, waiving appraisals, because we have record low inventory. And we really have a lot of buyers coming here from out of state and overseas too. With this whole pandemic, a lot of people are working from home and they want to be in the suburbs now. So with record low inventory, I'm saying that we really have 17 days of inventory right now. So if a property goes on the market, say Wednesday, and you're not able to see that property till the weekend, chances are it's probably going to be sold by Friday or Saturday, because they're calling for highest and best in like the next 2 to 3 days. They're trying to get everyone in all at the same time, and they're getting contracts. I mean, I thought I would never see this in my 30 years of selling real estate, but we have people sending in contracts sight and unseen. So it's just so important to work with a full-time real estate agent. And if you feel that an agent is not going to be willing to work with you as a FHA buyer or a VA buyer, is not going to advocate for you to represent you and present your contract, then I'm going to tell you right now, find another agent, because this market is not going to stay like this forever. I've been through the ups and I've been through the downs. Right now, it's hot right now. It can turn like that. So please, try to work with someone that's going to look out for you. that knows the program and can educate the listing agents about the program to get rid of the stigma that Jesse was talking about, because he's absolutely right. I started 30 years ago, and FHA loans, people used to, complain that it took too long. But if you have all your ducks in order and you're working with a lender that knows what they're doing, we can be just as competitive as a conventional loan. And it does not take that long. I have closed FHA loans before this whole pandemic within like 30 days, 30 to 35 days, because my buyer was educated. We got all our ducks in a row. We were working with the lender. And when you speak to Satal, he's going to tell you it's so important to pay attention to the dates on the contracts. So if you have everything ready to go, there's no reason for any delay. So again, just work with someone that actually knows the program. So I'm going to walk you through this whole process. So let's say if we found something today and we did a contract, you have typically 3 days for your attorney review process. And right now, again, you have to have an attorney that's going to be able to return your phone calls, get you in and out of attorney review, because what agents are doing now in this hot market, they will use your offer, and I hate to say this, to get more money. And that's what's happening, right now. So this attorney review process is so imperative to work with someone that can get you in and out, can protect you with the language, and get you to the next steps. And the next steps are going to be, once we get out of attorney review, we do like to have the lawyers hold the deposit money. And that's just good faith money. That's just good faith money to show the sellers that you do have the funds, to buy their house. The other important two parts of this whole process is the home inspection and the mortgage application. But like I said, right now, buyers are skipping home inspections. I'm going to tell you, as your agent and doing this for a long time, I would never tell a buyer not to have a home inspection. This is the biggest investment you're going to make in your life, and you need to know exactly what you're buying, and you should be there during the home inspection. On this home inspection process, they're going to take a look at the roof, the furnace, the central air unit, the hot water heater, all the appliances, the electrical outlets. If they detect mold or moisture, you can also get a mold test. If the furnace has been converted to gas from oil, and if the inspector says, maybe there was an oil tank in the ground, and if the listing agent doesn't know that, and it doesn't say that on the seller's disclosure, then you may have to do a tank scan. A tank scan can run you anywhere from $125 to $150 for a tank scan. The home inspection can typically run you like $495, a little over $500. And that's going to include the home inspection, the radon test, and also the termite test. Okay, so once we do the home inspection and we get the report, me as your agent representing you, I'm going to go through the report with you, and any concerns that we have to relay that to our attorney. So he will put everything in writing, all your concerns. If there's anything major that we would like the seller to either address, fix, or give us a credit, I'm going to always suggest a credit, because 9 out of 10 times when a seller is selling a house, they just want to just do the quick fix. It's easier for me, in my opinion, just to get the money as a credit from the seller, and then this way you can have any items repaired, the proper way. The other part of this whole process too is once we start now you have 10 days to do this home inspection when we get out of attorney review, and you have to start your mortgage application process. And it normally takes about, I would say, about a week or so to get the appraisal order, okay? And from start to finish, I would say we've been able to get mortgage commitments, say like in 3 to 4 weeks, just to get a commitment. And that's once the bank goes out and they appraise the house. Now we have had problems, just to say if we bought something for $300,000 and the bank goes out and says the property is worth only $280,000. And I'm going to also say it's so important for you never to waive the appraisal contingency. You only want to pay for what the house is actually worth. But the buyers right now are so desperate that they're doing that, and they're making up the difference. That's the key thing. So if you're under contract for $300,000 and the bank says the house is worth only $280,000, and you don't have that extra $20,000 to make up that difference, the deal can fall apart. And that's what's been happening. We have a lot of buyers coming here with a lot of cash from out of state, and they're waiving the appraisal contingency and they're bringing the extra money, to the closing table. So that's why it's very, very difficult right now, for first time home buyers, because we don't have a lot of cash, to compete with. But, I can honestly say, I think like the last 2 weeks, I'm starting to see things kind of like slow down, a little bit. Like I said, this hot market is not going to stay like this forever. You really have to be determined. You have to have a lot of patience. And if you're renting and your lease is up, say in January or sometime, I'm gonna say start looking now, but take your time and, talk to your landlord about, extending your lease. I'm gonna always say, never, buy a house when you have only like 60 days to get out. Take your time, and you really have to be comfortable and happy with your choice, because it's not like buying a car or buying a bicycle. So it's important to be educated. It's important to know exactly what you're buying. So this whole process can take us anywhere from start to close to like 45 to 60 days. Because once we get the mortgage commitment, then as a seller, there's two things that the sellers are responsible for. They are responsible for the smoke detector, and they are responsible for the certificate of occupancy. Now, every town is different. Right now, Somerset does not have a certificate of occupancy, and this is just an inspection that the township does. The township is just going to check their records to make sure if the seller finished the basement, that they got permits, or if they changed the roof or they changed the furnace, that they got permits. And if they did not get the proper permits, then they are going to be responsible to close out those permits. So Somerset doesn't have this, but North Brunswick has it, East Brunswick has it, Milltown and South Brunswick just started having it the first of this year. Now, again, the seller pays for this inspection. The only way you buy a property and the seller is not going to pay for this inspection unless you're buying a foreclosure or a short sale. And basically at that point, you're probably buying a property, as is condition. But again, even with that being said, if you're buying a house as is, you should definitely still have a home inspection, because you want to know what you're buying. You want to make sure that there's no major defects or any structural, problems. So this whole process can go from 45 to 60 days to closing. And the best part is, the day of closing, we also do a walkthrough, okay? We want to make sure when the seller moved everything out that they didn't drop something and knock the hole in the wall, or they didn't take the washer and dryer that was supposed to be included and it was on the contract. You just never know, because whatever's on the contract, has to be included. And so Tal can get into that later, but we've had stories in the past where the seller forgot that the washer and dryer was included and they want to take it. And then, you as a buyer go there, just do your walkthrough. And you're like, where's the washer and dryer? So again, I like to do my walkthrough typically like either the day of closing or the day before closing, just to make sure everything is okay. And I'm share my screen with you for one more thing. And this is the fun part. So I have the 10 commandments. So when you're going through this whole mortgage process and the home buying process, we become like best friends. We're best friends. You're best friends with your attorney, with your lender. And it's so important that all three of us are communicating, and you have to definitely let your lender know if you change jobs, so important, to do that. We also ask that you don't make large deposits, okay? Because everything has to be documented. And, you get pretty excited, once you get that mortgage commitment, you want to go out and buy some furniture, maybe buy a car. I'm going to tell you not to do that. That has happened to me in the past. But, don't buy any big ticket items till after the closing, because once you get a house, you want to get a car, it's so easy, but get the house first. Because once you buy that car payment is going to eat up your qualification as far as what you're going to be able to qualify for, for the loan. It's so important. So this is just a couple little 10 commandments that, I like to make sure that I go over everything, with my clients, because I want to get you to the closing table. I don't want any hiccups. My job is to make this as smooth for you, as possible. But I do want to kind of leave you with a couple of things, with the market being hot. Number one, do not get caught up in the drama with the bidding wars. Start a little bit below your budget. If your budget is basically say 325, I would say start looking at houses at 280 or 275, because chances are you're probably going to have to bid up a little bit. Okay. And if it's meant to be, it will be. Buying and selling is very, very, emotional. And, again, this is the biggest investment you're going to make in your life. And I'm going to tell you, you have to take your time. Right now, it's taken me, at least with my team, at least 6 to 9 months to actually, find you that right property, only because the market right now is extremely hot, right now. The other thing I want to leave you with, again, work with an agent that is familiar with these programs, and they know how to educate the listing agent. They know how to sell the program so that that agent can, present your offer to the seller and can answer any questions and make them feel comfortable. So if you're working with an agent and they just want to just blow you off because you're an FHA buyer or you're trying to do these programs, because I've gotten a couple phone calls in the last couple of weeks of agents not wanting to work, with FHA buyers and VA buyers. I'm going to tell you, just kick them to the curb and find another agent. Because when this market turns around, they're going to be wishing, they're going to be looking for you 3 or 6 months from now, saying, oh, we got so many houses on the market now. It's not a seller's market anymore. It's a buyer's
Hi.
market.
Hi, I'm Bina Patel. I have one question. How
Mhm,
can I find home? I'm looking for home. I
mhm.
want to buy. Yeah, how can I find it?
Yeah, so you can, you can give me a call. You could go to my website. But right now, what we're doing, I'm
Which
sorry.
one?
You can go
Which
to my
website?
website, ChiquitaPittman.com.
Huh?
ChiquitaPittman.com.
Okay. Can you send me email, please?
Yes, yes, yes. I
Okay.
will. I
Yeah,
will.
I'm looking for my area home.
Okay. And where are you located?
Middlesex County, Sayreville, Parlin.
Okay. Okay, Bina, I can certainly do that. That's not a problem. But I can tell you, as I've been checking the listings, every day, right now, typically you're seeing anywhere from 30.
I'm single mother. I'm looking for single family. Me and my
Okay.
son, two bedroom. Yeah.
Okay. Okay. All right, great. I will make sure that I get your information and I can certainly help you with that. Okay.
Okay. Okay.
And the other thing I want to just touch on, one last point, Jesse talked about the seller's concession. Now, a seller can typically, give up to 6% of the loan amount for your closing costs. Again, right now in a hot market, that's not a popular thing to do right now because there's so much competition. But when the market was not like this last year, it was very easy for me to negotiate and get sellers to help with sellers' concessions. So I just want to say, don't give up. I do see more inventory coming on, on the market, and things are starting to open up as more people get vaccinated. I think we're going to see more, inventory. But I have seen a little bit of a slowdown, in the last 2 weeks. So I'm going to say you just hang in there. Like I said, you can go to my website. You have all my information. I do have my own team. So if I'm not available, we're looking for, that bargain, that good deal for you every single day. Because what's happening now, if you can't look at a property until the weekend, then we're going to go through and do the virtual tour or do the FaceTime and walk you through the property so that you can at least have a fighting chance, to make an offer. And that's
Thank you so
it.
much.
No, thank you.
We do have some questions. You did touch on this, but I'm going to bring it up anyway. Andrea said realtors seem to feel that in this hot market, if you don't have all your cash ready, you cannot compete.
That's not true. Again, if you have that pre-approval, like what Jesse's talking about, we have that direct underwriting approval. And I know this program, so I'm able to present your offer and and have that listing agent understand that we can close in a typical 45, to 60 days. And another thing that I'm also doing, like, again, I will have that listing agent even reach out to the mortgage guy. I've had my mortgage guys contact the listing agent. That's why it's so important for you to work with an agent that knows this program, that's going to push and push and push and advocate for you. But I've had my agents send videos to listing agents, make phone calls, and just explain to them that they have all your documentation. All you need is to find that dream home.
And
I hope that answers your question.
yeah, feel free, Andrea, if you need, excuse me, if you need more clarification on that. Excuse me. Andrea also wanted, if you could go over again, the tank scan. Why is the tank scan important?
So let's say if we buy a property that was built in 1923, but that's been well maintained, and the homeowner has converted that property from oil to gas, but let's just say the parents passed away and the siblings are selling the house and they can't remember if the oil tank was above ground or in ground. But that's why you have to work with a good home inspector. My home inspectors are really good, and they will be able to, once they do their inspection, they will suggest to us that maybe we should do a tank scan. And I like to be safe than sorry. If I feel that, they converted from oil to gas, sometimes I check with the neighbors, because sometimes the neighbors know that the oil tank was in the ground and they had their oil tank removed too. So you always want to err on the side of caution. And that's only if you buy a very, very older home and you can't get the information that you need. And once you have that home inspection, if that home inspector suggests that you do a tank scan, then you should definitely do a tank scan. And that's based on his experience.
Right, thank you. Good questions. This one is, how does all the new apartment developments in Woodbridge impact home prices? Does it increase property value or decrease?
As far as rentals are concerned, is that the question?
KTW, that's what it says.
I know, I'm sorry, just in terms of home values, because I'm originally from New York and moved to Woodbridge about 5 years ago as a renter, but now looking to buy in Woodbridge. Middlesex County is high, but I'm just wondering, with all the new developments that are coming into the area, does it make it potentially easier to purchase a home, or is that a sign that things are booming and now property values and taxes and things are going to go up?
Well, I can tell you right now, just based on the market, the rental market is also extremely competitive. I have so many clients that are trying to find a rental because things are so expensive. Again, everything is really high. We are in a housing crisis with no inventory and the rents are high. And I can't tell you how many people I've met that they've been looking to even just to find a rental within their budget and they haven't been able to find anything. So right now, with no inventory and with the rent prices being extremely high, just like what you said, it's extremely tough right now. But again, things have to loosen up. Once things start to open up again, I do believe that, it can change like that. It's not going to stay like this forever. That's for sure.
Thank you.
You're welcome.
Are there any other questions for Chiquita? I don't have anything else in the chat. Feel free to unmute if you have questions. If not, I thank you, Chiquita. I appreciate it as always.
Thank you.
That's great information. And I did put her information, her contact information in the chat, so feel free to reach out to her. But now I would like to move on to our last speaker. So we have Sital Shah, and he's with Shah Legal Law Firm. He's our attorney, and I'm going to copy and paste his information in the chat now. Good evening, Sital. How are you? Thanks for coming on.
Hey, good evening, Cynthia, Jesse, Chiquita, and everyone. Hope all else is well. Thank you for having me. I'm attorney Sital J. Shah from Edison, New Jersey. And the best advice that I can give you is that when you sign a contract, you don't have to be worried. You have a 3-day attorney review period with your attorney. That means you have 3 business days to review the contract, ask questions. If you change your mind, you want to cancel the contract, there's no judgment. You do whatever you want. I call the attorney review period the agree to disagree period. That means your attorney is going to make changes to the contract to help you. Common sense, right? Buyer's attorney will help buyer. Seller's attorney will help seller. Once each other agrees on each other's changes and you sign off on the changes, attorney review is concluded. The best advice I can give you today is a few things. The first, I'll start off with practical advice. It is a hot market. Everybody knows it's really a tough market and things are going quickly. If you like a home and you really want it, he or she finishes attorney review first, wins the game. That means if you like the other side's changes and you compromise and the sellers compromise and accept your changes and you both sign off, you're done. That means the seller cannot entertain any other offers. The longer you wait to sign off, the longer the seller purposely waits to sign off, you're just asking for trouble and asking for more people to come and outbid you and take the home away from you. So what is to be learned? If you like something, move quickly and finish attorney review quickly. If nothing else that you remember that I say. In attorney review, once it's done, you typically put a deposit on the contract. People often ask me, how much money do I put down? $1,000 is a good faith deposit. After that is a second deposit, typically 2, 3, 5, 7, 8, 10 days after attorney review. People often ask me, how much should I put? There is no science, there's no textbook answer. Sellers always want you to put more down. Buyers always want you to put less. So it's really, it could be 4%, 5%, 3%, 10% down, some number there too. After attorney review, you'll typically have 14 days to do a home inspection. You will provide your attorney with the report, email him a list of repairs, and then your attorney will help you negotiate either a credit or get the sellers to undertake the repairs. I'll explain a little bit more on inspections in a minute. Another item in the contract that people often overlook is what's included. By law, the stove is included. For some reason, people think refrigerator, washer, cable TV, they have a fundamental right to these things when you buy a home. The only thing required is a stove. Now, if you happen to see in the contract or in the house a new washing machine or brand new GE dishwasher, take 5 minutes to jot that down and don't be embarrassed, right? New looking GE dishwasher, brand new stove. Why? Because appliances that are included doesn't mean you're getting the ones that you see. Do not assume what you see is what you get. I've seen situations where the new appliances are there, buyers are excited, they sign the contract. Then as we get closer to closing, the appliances are switched out and you see 1972 Grandma's Special show up. They only had to give you an old refrigerator. Nothing said new. So take the time to jot that down. After home inspections, you're going to have 4 weeks to get a mortgage commitment. The lender is going to give you a piece of paper, basically simple English. They reviewed your financials. They approved you for the loan, and they will give you the money on the day of the closing. Now, 4 weeks is usually sufficient time. You want to make sure you get it done within that time. If not, you want to ask your attorney for an extension. Second, practical advice. This is just general advice dealing with lawyers in anything you do. So not even in this seminar. The best thing you can always do for lawyers is follow dates. If a lawyer tells you your mortgage commitment is due 4 weeks, your calendar should say 3. If the home inspections is due in 14 days, your calendar should say 10. Why? Whenever you blow dates, you're never going to win an argument with an attorney. You can try, but it's not going to be successful. The best thing to protect yourself is your rights by sending an email for an extension. For example, let's say 14 days a home inspection is due. The inspector got COVID, he's sick, he can't do it, whatever it is. You shoot out an email to your attorney shoots out an email to the other attorney, say, I understand inspections are due tomorrow. I need 5 more days because the inspector is sick. You protected your rights by saying it versus doing nothing, waiting till 14 days go by, and then tell your attorney, I need more time. asking your attorney to be Superman each time, it can work, but not every time. So to save you money, aggravation, and energy, it's better to ask for an extension in advance. After home inspections and the mortgage, your attorney is going to review title work. He's going to make sure there's no lawsuits, liens, or judgments on the property. This is not your problem. This is your attorney's job. It becomes your problem if you don't hire a real estate attorney or professionals. If you hire attorneys that don't do real estate, things get overlooked. Now, the seller's mortgage, for example, has to be paid off, water bills, sewer bills of the seller, because those are lienable on the property. More importantly, you want to make sure that the actual seller on the contract owns the property. Now, I know that sounds funny. When you get a contract and it has the name of a seller, we all assume that's the seller. I can write my name. I can write Cynthia's name. How do you know who owns the property? The title work will tell you. It will also tell you if somebody else is the owner that's not on the contract. And you want to make sure that we add them on, that so it becomes an enforceable contract. One little tidbit. Title work in real estate is it's detail oriented. It really takes somebody who has the experience to handle it. I'll give you an example. If the seller doesn't pay child support and is in arrears, that is a lien on the property you're about to buy. Now you'll say, but I have nothing to do with child support. It's the seller. I'm the buyer. Well, not only the arrears is a lien on the property, but the next 12 weeks of future payments is an automatic lien on the property you're buying. All right. Your attorney, it's like a team-oriented approach. Your attorney is working with everyone. Jesse, Cynthia, Chiquita, the lender, the home inspector, insurance company, you name it. Your attorney is like your personal bodyguard. Their job is to protect you, make sure you're not taken advantage of, and coordinate with everyone. Because once you coordinate with everybody, you get to the closing. That is the role that your attorney should have. Now, let's get back to home inspections. I mentioned to you, you have 2 weeks to do it. You'll send a copy of the report to your attorney. You'll ask him for repairs. The two questions I get asked, the number one question, when I do home inspections, if I don't like the results, I don't want the house anymore, I change my mind, can I cancel the contract? The answer is no. If the sellers perform the major repairs, then you don't have a legal excuse to get out of the contract because they're doing the repairs. What's the excuse? Now, if they don't do some of the major repairs, you can use that as a legal excuse to get out of the contract. Now, no, the sellers have to address major repairs. If they don't, you can cancel. Major is defined by the contract: heating, air conditioning, mechanicals, plumbing, sewer, water leaks. The basement and roof should be sound and structurally free of leaks. No termites, mold, radon. Windows should be working. Mechanical systems like sewer and plumbing, hot water heater, those are major. If the sellers decide to do other repairs, you say, thank you. That's a Christmas gift. They didn't have to do it. So if they don't do a small or minor repair, you don't have a right to cancel the contract. The sellers will either perform the repairs or provide you with a credit. How do you know the credit or the money is enough for the repairs? Simple. Always get an estimate from a licensed contractor. Then you know if you're treated fairly. For example, if you have a plumbing repair, a seller offers you $75 towards a repair as a credit. Your plumber gives you an invoice for $700. You know $75 is not enough. Maybe you negotiate $500, $600, closer to the number. Then at least you're in the ballpark. So this is very important to keep in mind. Now, as we finish, your attorney will talk to the title company, the lender, and everyone else, and we'll schedule the closing. Let's make pretend the closing is scheduled for 2 o'clock tomorrow. Your attorney would have already communicated to you today the amount that you have to bring to closing. You'll be scheduling a walkthrough of the property either tonight or tomorrow morning. That means you want to check out the property one last time. You want to make sure there's no damage, no leaks, no vandalism. Why? Because those things you want to bring up before closing, not after closing when you own the property. Let's say the heating system or AC didn't work. It's hot today, tomorrow, this whole week. You try the AC on tomorrow morning, it doesn't work. Maybe it can be fixed. Maybe it's a credit, a small repair that can be done before closing. But let's say the entire AC system collapsed and it needs to be replaced. You won't be closing 2 o'clock tomorrow. We will adjourn the closing, get estimates, and this will require a little bit more effort on everyone's part to come to a resolution. The point of what I'm trying to tell you is you want to visit the property. I get asked all the time, do I have to be at the home inspection? Should I be there at the walkthrough? I don't know how these questions occur because I'm not the one buying the house. It should be important to you to be there and witness firsthand what's going on in the home you're about to buy. All right. Now, the last thing I'm going to say, I always say for myself, I try to save the best for last. If you forget anything that I said so far, no problem. Just try to remember, finish attorney review quickly. You'll appreciate that comment later on. I will end with one last thing. Try to hang on this one point, and I promise that you will thank me one day or later on. Whenever you buy property in New Jersey, the seller has to inspect the property with the township and provide you with a certificate before you close. Every town has 1 or 2 inspections, either a smoke detector and carbon monoxide where the fire department comes out, checks the detectors. If they work, they sign off and issue a certificate. Easy. The second one is the building department, called certificate of occupancy. They come to the property, it passes, they issue a certificate. If it fails, they tell the seller what repairs to do. Seller comes back and tells the township to please re-inspect. If on the second go around everything is good, they pass it. Every township has 1 or both inspections, either CO, certificate of occupancy, or smoke detector certificate. Now, every town could have 1 or the other or both. Google it or call the town and they'll tell you. For example, out there, if you're buying a home in Edison, they require smoke detector certificate and CO. If you're buying in North Brunswick, they just require a CO. If you're buying in Franklin Township, they require only carbon monoxide and smoke detector. Everybody follow the pattern? It's 1 or both, either or. Now, let's say you bought a property today and you found a finished basement and you're very excited. The reason you put the offer down with the agent and you're excited. 50% of the population may have a thought and wonder whether the basement was done legally with permission from the township and everything was done correctly. The other 50% of the population may never give it a thought, happy-go-lucky. They don't have the wisdom or the thought doesn't occur. There's no judgment here and there's nothing wrong. You decide which group you're in. Let's assume you signed the contract, you have a finished basement. Your attorney asked the other side, is there proof that the basement is legal? The township that you're buying only requires a smoke detector certification, nothing else. The seller's attorney provides it to your attorney. 2 things will happen here. That's the only certificate the township requires. Your attorney will either accept that certificate, give it to you, the matter ends. Or your attorney, correctly, will block that and say, no, I need permits for the finished basement. Let's assume your attorney accepts a smoke detector certificate and does not ask for anything further. Now you closed, enjoyed the place, have your housewarming, and after all this COVID, you're partying it up like you never did before with your housewarming guest. 3 years later go by, a new buyer likes your finished basement, likes your TV that you added, and is very excited and places an offer. Except this buyer is much more smarter than you. Don't feel insulted. There's millions of people much smarter than you and I. This buyer asks you for legitimate paperwork for the basement. You go back into your closing file and you pull your smoke detector certificate and you hand it to your attorney. Your attorney gives it to the other side and they say, thank you, but no thank you. Where's the permit for the basement? They call the township and the township says there's no record of the finished basement. That means a basement was not done legally. That means you're not paying taxes on it and the township is not aware. The buyer will ask you to legitimize the basement. You're now responsible to legitimize it. You may get plumbing drawings, architectural drawings, electrical drawings, and legal fees. These can add up and are very expensive. I assure you, you'll be very upset that the basement that you just enjoyed for 3 years, spending money now, making it legal, which the prior seller did not do for you. You will say, hey, I shouldn't have to do anything. That defense will work in third grade. That will not work today. You will have to do this. Now, how do you solve this problem? This is why I keep it for the end of the seminar, this very point. It's against generally my financial interest to tell you how to do it, because we make a really good living helping clients solve these problems all through New Jersey. First, you can file what's called an Open Records Public Act form. It's a free form, Open Records Public Act. Once you fill out the form can be online or in code enforcement in any township. Just call code enforcement. It's a free form. You don't have to be the seller to fill it out. You can just complete it, and by law in 10 days, the township will share with you whatever information is in their file with you on the property. Excuse me, that doesn't mean anything is in the file. Now you have to be a detective. Let's assume there's nothing in the file. Let's assume the seller told you I have a brand new water heater, brand new basement on file. You've learned something today from this seminar with me. If there's no permission and they are bragging or boasting brand new water heater, brand new roof, brand new HVAC, and there's no permits, it's your job to tell it to your attorney to have the sellers to get these permits. Why? Because after you close, it will become your responsibility and you want them to do it on their watch. The other thing I would do is call code enforcement, the old-fashioned way, Googling their phone number and calling them up. I've seen Open Records Public Acts. People are human, make mistakes. They're not updated the forms. When you call the old-fashioned way and call code enforcement, you ask them one simple question. Are there any permits that are open? Whatever they say listed. If anything is open, you want to tell your attorney to close the permits out on their watch before you close. Otherwise, anything open after the closing, you will have an educational process and learning how to close it out at your expense afterwards. The whole goal of this seminar is try to avoid these mistakes and try to deal with this before you close. That's the overall process. So fill out Open Records Public Act, call code enforcement, and I think you'll be in good shape. I'm attorney Satal J. Shah in Edison, New Jersey. We handle closings in all 26 counties in New Jersey. Just because you're not buying in Edison or near Edison doesn't matter. We have 3 associates and we travel throughout New Jersey to assist you in the home that you are buying. If you have any questions, please feel free to call. I know Cynthia's given our information. The Attorney Shah's Guide to Buying Your First Home is in Spanish also. I got 6.4 million web hits and we get a lot of good feedback. It's been on multiple shows and just general questions in buying a home. Feel free to follow us on Instagram at ShahLegal_COM. That's ShahLegal_COM for announcements and special announcements and legal education seminars on our Instagram. Again, I wish everybody lots of success. It's 8:45 at night. Thank you for listening and God bless everyone. Thank you.
Thank you so much, Satal. Such great information from all of our speakers. I have one question for you, Satal, from
Sure.
Charlene. She's asking, the attorney and title company, is that the same or 2 different entities?
2 totally different entities.
Thank
Your
you.
attorney will do all the legal work and the title company will order title work. It'll be your attorney's responsibility to review title work. They're 2 separate and distinct vendors, and you'll be paying both of them separately at the time of closing.
Great, thank you. Are there
You're
any
welcome.
other questions at this time? Feel free to unmute. And I did paste all of our speakers' contact information in there. You can always reach out to us at HMFA. What I also did is I put in the chat area 2 links. So we have a link for where this recording will go on our YouTube channel. It'll be uploaded by mid-end day tomorrow. And then also there's another link. If you do want to join another webinar, we're having these until mid-June. Or if you know someone that would like to join them, there's a link in there to our website and you can join another webinar later on. But with that, I don't see any more questions. So I want to thank everyone for coming on this evening. Thank you, Chiquita. Thank you, Jesse. Thank you, Satal. I appreciate it.
Thank you.
Everyone stay safe.
Yes, stay safe. Have a great evening, everybody.
Good night, everybody.
Good night.
Good night.
Thank you. Good night.